Hey guys, and welcome back. Over the past few weeks, we've seen a sizable drawdown in the market. Today, I want to go over the 3 stocks with amazing growth potential that I'll be buying on this dip. Those 3 companies are Nvidia, Microsoft, and AMD. Make sure to watch until the end of the video for my analysis on AMD. It has an amazing company, an amazing growth potential, and honestly, I think it's just been overshadowed by Nvidia's successes. From these prices, I think there's over an 80% upside, and I really want to tell you guys why I think that. Let's get right into the video. The first company that I really want to look at is Nvidia. And everybody knows about Nvidia. Nvidia is the AI darling. It is an amazing company. It has great growth prospects, and it provides the best AI hardware on the market, period. They have an amazing software suite, but the stock has really struggled over the last month. Despite the fact that Nvidia is amazing and they keep smashing their earnings reports, for some reason the stock continues to suffer. We can look at the chart right here. They ran up since May of 2024. They reached some all-time highs around here. And since then, we've been largely flat in this sort of decline over the past few months. The stock really hasn't been going up. Most people have trouble pricing Nvidia. I mean, this is clearly a company that's going to be bringing in a lot of revenue over the next couple of years. But there's some uncertainty behind it, right? We don't know how long this AI build-out is going to last. And so I think all of this uncertainty is really manifesting in the price action that's going on. Now, we can see right around here, this is where DeepSeek happened, and we had an 18% drop. And we sort of recovered recently, and then Nvidia reported their earnings, and all of a sudden, we're back down. Currently, Nvidia is sitting at about $125, and I personally think this is a great price to enter into an Nvidia position if you don't have any exposure yet. Always remember, my videos are not investment advice, but they are my perspective, and they give insight into what I will be doing with my own portfolio. So the big reasons why I think that Nvidia over the long term is going to be such a great winner is because they're currently dominating the GPU market. They have a 90% market share in data center GPUs. Companies cannot get enough of Nvidia's GPUs. They're fighting tooth and nail. They're filing lawsuits to be on Nvidia's customers list. It's amazing to see, and they're in a really great position to keep on winning, especially as AI infrastructure continues to build out and as our society as a whole begins to adopt AI into our everyday lives. They have an outstanding competitive moat. Nvidia has a robust software ecosystem that draws people to their GPUs. Not only are the GPUs the best bang for the buck in the market, not only are they the most efficient and provide the most computing power, but they also have all of these software tools that they can use with the GPUs. Nvidia essentially owns all of AI. They're selling all of the tools that developers and companies need in order to build out their own AI infrastructure. And that includes applications like robotics. Like you have the Isaac Sim, you have Omniverse, which they talked about at CES. They have so many things going for them and so many people being drawn to their products that it's really hard to root against them. Most analysts are also estimating that Nvidia is at least a year or two ahead of AMD, which is their greatest competitor. And we kind of see this in the market where whenever AMD releases a new AI accelerator, they're comparing the performance of their new accelerator to NVIDIA's old accelerators, right? And so that alone kind of tells you that AMD is behind. When a company goes out and buys a chip from NVIDIA's competitor, like AMD, they're not buying that chip because they want the latest and greatest tech and software suite. They want a solid chip that maybe meets the performance of NVIDIA's old chips, but might cost a little less. So when somebody buys AMD, they're taking off a little bit of premium. You're getting the compute that you would have gotten last year, but at a lower cost. And so that's why people are buying AMD, and that's the role that AMD is shifting to. Well, that's the role that AMD is forced to shift to because there's no other option for them. So the fact that NVIDIA maintains a technological lead in front of their competitors places them in a really dominant position in the marketplace where they're in control. Everyone has to bend and kneel to NVIDIA's will as they decide who they give the most chips to, right? The other part of their moat is the fact that NVIDIA is really becoming a name brand. I'm in grad school right now, and I can walk around campus, and most people know what NVIDIA is. I'm actually going out in town. I go to church on Sundays, right? And I'll talk to people, and they know what NVIDIA is. 5 or 6 years ago, when I was buying an NVIDIA GPU for my PC, nobody knew that name. Everybody knew Intel. Maybe some people knew what AMD was, but not many people, unless you built computers before, know what NVIDIA was. NVIDIA is becoming a household name. I genuinely believe in the next 10 years, people will know that their autonomous vehicles, that their AI is all powered by NVIDIA chips. And the fact that they have that momentum and that name brand, that image of being the best, of being the company that's powering the AI revolution that provides a lot of strength to their brand and reputation. The last thing I really love about NVIDIA is their financial strength. They have gross margins over 70%, and they're honestly making just too much money. They're making so much money that they're just throwing it back to shareholders and saying, here, have some buybacks, here's a little bit of a dividend. The fact that they're thinking ahead and they're allocating some of their free cash flow back into share buybacks, returning that capital to the investors, is something that is indicative of a very, very financially healthy company. NVIDIA's current PE ratio is a 44.65. That's honestly not very high for a company that's projected to grow at over 30% this year. That's a pretty reasonable PE ratio. When you look at the forward PE, it's only 27.8. That is extremely cheap for a company that's growing at 30+% a year. Another great way to value NVIDIA is by looking at the PEG ratio. That's the price to earnings growth. Anything below a 1 is generally considered very good value, and NVIDIA is at a 0.8. I genuinely believe that with these metrics, you're really not paying that much to either grow your position or start your position in NVIDIA. Now, personally, when I look at the share price, I'm thinking of buying NVIDIA at anything under $120. That's what I'm really aiming for. If I didn't have a position in NVIDIA, I would consider starting my position between anywhere from $120 to $140. But I already have 50% of my portfolio in NVIDIA, so I'm really not looking to add to my position that much unless there's really, really good bang for my buck. I'm not scared of placing more money in NVIDIA because I have so much faith in the company and I have very high conviction. However, I also don't need to increase my risk at high prices. So $120 to $140 is where I would consider it, but I wouldn't be hell-bent on doing it. Anything above $140 is really where I would just start holding my position. I think the risk vastly increases once the valuation of NVIDIA increases. I think there is a little bit of uncertainty that you need to be wary of when you buy into the company, which is you never know if some global event happens, some recession happens, and companies are hurting for money. The first thing that's going to go is this new wave of innovation for AI. Because the business models of the companies who are buying into this infrastructure aren't completely reliant on AI yet, it's pretty predictable that if something bad happens to the world, if there's terrible events, the first thing that these companies are going to stop spending money on is their AI build out. So that's why I say around $140 and above, I probably wouldn't be adding to my position, but anything $120, I would love. With all that being said, within the next 12 months, I think that NVIDIA is going to be at about $160. So in March of 2026, if I saw $160, I would be very happy as a shareholder. That's about a 28.2% increase from current prices. And the reason I think that NVIDIA is going to increase to $160 is because I don't think people have realized this yet, but the world is always going to need more computing power, period. Right now, NVIDIA is providing the best, cheapest, most cost-effective, and energy-efficient way to get the most computing power. And so because they're positioned as the dominant player in AI, in providing computing power, the tailwinds that are coming from the increasing CapEx from these cloud providers, the tailwinds coming from new startup companies who want to create their own large language models, everyone who's going to start in the AI business is going to go to NVIDIA for their GPUs. And I think that's a massive tailwind, especially over the next 12 months. There's just a little bit of uncertainty. There's a little bit of market risk involved. However, I'm very confident that NVIDIA will be at around $160 come next year. The next company that I want to talk about is Microsoft. If you've been a Microsoft shareholder over the last year, you're probably a little bit disappointed. While NVIDIA was returning insane amounts to shareholders, Microsoft has lost over 4% in the last year. In the second half of 2024, we saw a nice pop in the price, which was nice. The PE went up to about a 36, 37, but we slowly came back down and we've been pretty flat ever since. Now, even though Microsoft has underperformed the market over the last year, I really believe that the stock price is going to take a turn for the better. Microsoft is slightly undervalued, but the growth story is very much intact for them. Over the long term, Microsoft has proven that it is an amazing company with awesome fundamentals, and I think that its long-term growth prospects just cannot be ignored. At these lower valuations, I think it's a great buying opportunity. Now, I do not say this lightly. Microsoft has the greatest fundamentals and business model in the world. They have a little bit of everything. They dominate in productivity and business software. So think about Microsoft Word, right? I'm using Microsoft PowerPoint to make this video. They're the best at it. They have that subscription model, which gives them very reliable and stable revenue, as well as stable revenue growth. That makes it very predictable, which is very nice. They also have the best operating system in the market. I love Windows. All of my friends love Windows. If you play video games, if you use your computer for more than just listening to music and watching YouTube, you probably love Windows operating systems. 70% of desktop computers globally use Windows. I mean, that's really all I need to say. And currently, Microsoft is growing extremely quickly in their cloud computing services segment. They're number 2 behind Amazon. I believe that Microsoft Azure, their cloud computing service, is going to provide a massive tailwind to revenue growth in the coming years. Because Microsoft is consistently printing off money, they're very well positioned to tackle the AI race. That's why they're able to pour so much money into their data centers. They're going to spend over $80 billion on AI this year. $80 billion. That is a lot of money. I can barely rub 2 nickels together. They have $80 billion to put into data centers. That is nuts. And the fact that they have so much money is really going to help place them at the forefront of this industry. My last point that I'll go over is that Microsoft has a higher credit rating than the US government. I mean, mic drop, right? Like, do I really need to say anything else? They have over $70 billion in free cash flow coming into the company every single year. I really don't need to say anything else. They are probably the greatest company in the world fundamentally. I can't justify not having Microsoft as part of my portfolio when they're growing at a very healthy organic rate, probably between 13 to 17% a year. And they have such amazing fundamentals. They're not highly leveraged, and they're just printing cash off for their investors. It's really an amazing company. Currently, Microsoft is sitting at a PE of about 32, but their fiscal year 26 forward PE is only a 26.05. So this is why I'm saying a 26 PE for a company that's growing 15 to 17% a year. I mean, that's a pretty solid price to be paying. So I'm going to be buying Microsoft at anything less than $400. Between $400 and $440, I'm sort of in the middle. I don't think it's a steal, but I also think it's a solid price to get into the position. If I had some leftover cash, I didn't know what to do with it, I would buy Microsoft, but I wouldn't be pouring in all of my cash into Microsoft at those levels. Anything above $440, I would just be holding my position, waiting for another dip, and if a dip comes, great. If it doesn't, also great. Stock goes up, my money goes up, I'll put my money elsewhere. My 12-month price target for Microsoft is $460, which is about 15.9% upside from current prices. The reason I'm so bullish on Microsoft is because I think the world is always going to need more compute. And I think that Microsoft is providing that in their cloud computing segment, which is growing extremely rapidly. In all of their other segments, they have extremely reliable organic growth, and they have great fundamentals. It's really hard to not be bullish on Microsoft, especially when their price is below $400. Finally, we've made it to AMD. I have been wanting to cover this company for probably over a month, but I haven't had the guts to make a video on it yet because that price has just kept going down. Over the past year, I'm a little disappointed as an AMD shareholder. Now, to be honest with you, I kind of expected it. The reason I say that is because in 2023, when Nvidia started really taking off, AMD's stock was basically matching Nvidia and just going up for no reason, even though AMD wasn't coming out with the same amazing news that Nvidia was. And so there was a lot of hype around any stock that was providing the shovels and pickaxes for this AI revolution. And so when Nvidia's PE ratio was somewhere in the 200s, I was kind of thinking to myself, yeah, I don't think this is going to last very long, especially since it was very clear from the get-go and very clear from just history, what we've seen in the GPU markets for personal computers, that there's only going to be one leader here, and it's probably going to be Nvidia. But nonetheless, I've held the stock. I've held the stock through this 51% downturn over the last year. But I'm still really excited about the company, and I think this is an amazing time for me to be buying AMD. This is a great time to be adding to this position in the portfolio. So let's talk some specifics on Advanced Money Destroyer, Advanced Micro Devices. The company still has really high growth prospects. Right now, Intel has been suffering in the CPU market, and AMD has been gaining market share. They're also the number 2 player in the data center GPU market, which is growing at a very rapid pace. Their data center, year over year, has grown 94%. This just goes to show you, despite AMD not being the greatest beneficiary of this AI infrastructure build-out, they are still benefiting, and their AI segments are really, really taking off. The company also has great financials. They have low debt, their free cash flow is growing, and the number of outstanding shares is stagnant. So there isn't a ton of stock-based compensation. They're not issuing new shares and diluting ownership. This is all really good for the shareholders. Now I want to start with this. In 2025, the GPU market is estimated to be at $86.94 billion. In 2030, so we're talking in 5 years, the GPU market is estimated to grow 33.2% per year and get to $364.53 billion. Now, I am not a mathematician, but if you take 5% of this number right here, you get about 15 billion. Okay? So if we assume that AMD only gets 5% of the GPU market in the world, they're going to be raking in $15 billion a year. And that's about triple of what they're currently raking in from their current data center market. So what does this mean for AMD? I think that data center, much like for Nvidia, is going to be AMD's largest segment. I think it's going to be the cash cow of the company. And I also think that it's still going to grow a substantial amount over the next 5 years. Currently, AMD's PE is a 99.86. But look at this, guys. This company is forecasted to grow at 20% a year. Their forward PE is a 21.19. Ladies and gentlemen, we're sitting on gold. I'm sorry, I don't know how you can convince me that AMD is not going to benefit over the long run from all of these trends happening in the market. How is AMD at a forward PE of 21.19 any more risky than what Nvidia is currently? I think it's substantially less risky, actually. I think that one of the reasons why AMD is going to return so much isn't just from its data center segment growing, isn't just from the market share that it's stealing from Intel. I think there's going to be some multiple expansion over the next couple of years. Even if this just went from a 21 to a 30, that's about 50%. So you get a 50% return just because investors realize, oh wait, they're actually growing at 20% a year. Investors are doubting that growth story right now. So my buy, sell, and hold prices, I'm buying at anything less than 120. And that's 20% higher than what the price currently is. Anything less than 120, I think is totally a buy. Between 140, I'd be cautious, but maybe some small dollar cost averaging every now and then. Anything above 140, I'd be holding it. There is a little bit more risk when you go up 40%. But now the question becomes, why are investors discounting AMD so much? Why is AMD down to $99.86 a share? It doesn't make sense. Why, when you're growing at 20% a year, when you're beginning to dominate the CPU market, when you have a share of the data center GPU market, why does everybody hate you? Why are investors selling you like crazy? Well, I'll tell you why. This slide is a slide from AMD's Q4 2024 results. Now, this is their revenue broken down by segment. I want to direct your attention to the red rectangle. So this is their year-over-year percentage change by segment. So if we look at data center, right, their data center was up 69% and their operating income was up at 74%. So that's pretty high growth year over year. Their client revenue, which is where they're basically providing CPUs to computers, was up 58%. But now here comes the bad news, right? If you look down at gaming, so these are their gaming GPUs, their gaming hardware that they're providing to their customers. Sales were down, revenue was down almost 60%. That should be alarming to most people. Embedded was down 13%. So we're looking at a drawdown at both of these segments, which isn't good. I'm not saying that's a good thing. However, when you take into account the fact that AMD this last quarter brought in more revenue than they've ever brought in, why does it matter? Why does it matter that gaming's down 60% if their data center is growing so quickly? AMD is no longer going to be this gaming GPU, gaming CPU centered business. They are going to go all in on AI, and that's where the revenue is going to come from. So investors are too caught up in the past. Investors are currently looking in the rearview mirror and looking at what AMD has been. They're sort of in this transition phase where investors are thinking, wow, the gaming and embedded revenue is down so much, and that is what I'm so used to guiding my expectations, so let me sell the stock. Yet they're failing to realize that there's been a shift in the market. There's been a shift in the business model where AMD is no longer about those segments. They're all about the data center. That's what's going to be driving the growth in AMD, and if you think otherwise, you're probably wrong. Now, I might eat those words in 5 years, but you're probably wrong. Today I'm making the bold claim. I'm saying my AMD price target over the next 12 months is $180. I think the sentiment on this stock is going to reverse. I think when AMD comes out with 2 or 3 more earnings reports and they show that their data center revenue is still growing at a solid and quick pace, investors are going to turn this stock around and it's going to explode with an upside of 80.3%. That's where I think AMD is going to be in March of 2026. The reason I say that is because, number one, the world is always going to need more compute, same as Nvidia. The second is there has to be some alternative to Nvidia chips. We're already seeing hyperscalers start to create their own custom silicon. What that's indicating is they're looking for an alternative to the expensive GPUs that Nvidia is providing. I think AMD is going to fit well within that niche. I don't think AMD needs to be the best in creating the fastest GPUs. I don't think they need to be the fastest. I just think they need to provide a good, cost-effective alternative to Nvidia's older GPUs. That's all I think they need to do. AMD just needs a small sliver, just a sliver of all of the money that's going toward these data center GPUs, and they're going to be a massive winner in the coming years. Mark my words. And I think the most important thing is their multiple is going to expand from a 20 to a 30. That's 50% upside in and of itself. I mean, this 80% sounds like a big number until you realize when you have a company that's growing from 15 to 20% a year, it deserves a PE above a 20. It deserves something around a 30. I mean, Apple, for crying out loud, has a PE of 39 right now? And you're telling me AMD, which is growing 4 times as fast, has a 20? 4 PE of a 20? I'm sorry, guys. It just makes no sense. So anyway, I'll get off my soapbox, but I really believe in this company, and I really see a great future ahead for AMD shareholders. That's all I had for you guys today. I hope you learned something. I hope you took something out of this. Let me know what you guys think about my analyses. Am I right? Am I wrong? I'd love to know. Thank you all so much for watching. Have a blessed day. And if I earned it, please subscribe. Thank you so much. Have a good one.